G'day team, James Walker here from AUS Pension Guide. Welcome back to the channel that looks after your pocket when the big institutions won't. Now, right before we kick off, if you haven't already, make sure you hit that subscribe button and smash that bell icon. By doing that, you'll ensure you never miss a single time-critical Centrelink or tax update that could put thousands of dollars back into your household budget. Now, let's have a bit of a straight-talking chat to kick things off today. Have you ever stood in line at a major supermarket, a massive hardware store, or even a local department store, pulled out your concession card, and asked the young cashier, "Do you offer a senior discount?" If you have, you already know the drill. 9 times out of 10, you get a completely blank stare, a shrug of the shoulders, or a polite, "Sorry, love, we don't do that here." But here is the absolute truth that senior retail executives and the Australian Taxation Office do not volunteer to you at the checkout. They absolutely do it. They just do not advertise it. There is what I call a cash register conspiracy running rampant across Australia right now in 2026. Major corporations, power monopolies, and even the tax office have thousands of dollars earmarked specifically for older Australians. But their staff are trained never to offer these discounts voluntarily. Why? Because if every single eligible senior in this country claimed what they were legally entitled to, it would cost these institutions billions of dollars overnight. Take a look at Gary and Lorraine Higgins from Newcastle. They are a lovely couple, aged 68 and 67, who worked hard their entire lives. They are self-funded retirees with $1.4 million sitting in account-based super pensions. Because they saved hard, they confidently assumed they were too wealthy to get anything from the government or major stores. They thought they were completely locked out of the system. But by failing to understand how the massive March 2026 threshold updates work, Gary and Lorraine were blindly throwing away over $3,500 every single year. They missed out on power rebates, free vehicle registration, and over $1,200 in direct cash refunds from the tax office for shared dividends, all because no one handed them the blueprint. Today we are stripping away the corporate smoke and mirrors. I am handing you the exact forensic blueprint to claim the top 10 hidden senior discounts, retail loopholes, and ATO tax offsets that cashiers and bureaucrats will never tell you about. We are talking about concrete strategies updated with the absolute latest March and July 2026 numbers. Before we dive into discount number 1, there is one critical rule we have to clear up, because confusing this is the number one reason seniors miss out on their savings. In Australia, you have 2 entirely separate card universes. First, you have the state seniors card. This is issued by your state government, like New South Wales, Victoria, or Queensland. It is usually available once you turn 60 to 65 and work less than full-time hours. There is no assets test or income test for this card whatsoever. Second, you have the federal concession cards. These are issued by Centrelink once you hit the official preservation age of 67. This includes the pensioner concession card for those on the age pension and the Commonwealth Seniors Health Card for self-funded retirees. These cards are strictly means tested. The retail hacks we are covering today mostly use your state seniors card, while the heavy-hitting utility and ATO tax loopholes require your federal concession cards. Now that we have that sorted, let's look at the first major retail discount being hidden from you right now. Let's blow the lid off the biggest retail myth in Australia. If you walk into a Woolworths, a Coles, and Big W, or a Bunnings warehouse, and you present your state seniors card or Centrelink card to the cashier, the system cannot scan it for a direct discount on your groceries or tools. The cashier isn't lying when they say there is no register-level discount. However, what they won't tell you is that your state government has negotiated a backdoor portal that guarantees you a flat 5% off your entire shop every single day of the year with 0 item restrictions. To bypass the cash register restrictions, you have to change how you pay. Instead of tapping your regular bank debit card at the terminal, you must use pre-discounted e-gift cards purchased through your state's dedicated seniors card online member portal. To execute this step-by-step and ensure you never pay full price for groceries, clothes, or home maintenance items again, start by logging into your state seniors portal. Go to your official state government seniors card website, like the New South Wales Seniors Card portal or the Victoria Seniors Card site, and log into your free member account using your card number. Next, navigate to the discounted voucher section. Locate the commercial rewards or retail section of the website and select the Woolworths Everyday Wish or the specialised IGA and commercial gift card purchasing systems. From there, purchase your e-gift card at 5% off. Select the dollar amount you need for your upcoming shop, such as a $200 voucher. The portal will automatically apply a 5% discount at checkout, meaning you only pay $190 out of pocket for $200 worth of value. Finally, scan the barcode at the checkout. The digital gift card is instantly emailed to your smartphone. When you are standing at the self-checkout or regular register at Woolworths or Bunnings, simply scan that digital barcode on your phone to pay for your items. Think about the math on this one. If a senior household spends an average of $200 a week on groceries, fresh meat, and basic household items, utilizing this single strategy saves you $10 every single week. Over the course of a year, that is $520 in cold hard cash kept inside your bank account rather than handed over to multi-billion-dollar retail monopolies. This next hidden discount doesn't come from a retail store. It comes directly from the Australian Taxation Office, and it is arguably the most powerful financial shield available to older Australians. It is called SAPTO, which stands for the Senior Australians and Pensioners Tax Offset. The biggest mistake I see seniors make every single year around tax time is assuming that the standard Australian tax-free threshold of $18,200 applies to them. They think that if they earn $25,000 or $30,000 from a part-time job, a small business, or investments held outside of superannuation, they are legally required to hand over thousands of dollars to the taxman. But if you are aged 67 or older and you meet the residency requirements, the ATO legally unlocks an exclusive boosted tax-free safety zone. For the current tax season, the maximum single SAPTO rebate sits at a substantial $2,230 per year. When you mathematically stack this exclusive senior offset with the standard low-income tax offset, your effective individual tax-free threshold completely transforms. Single seniors pay absolutely $0 in personal income tax and are completely exempt from the Medicare levy on income all the way up to $35,813 per year. Partnered seniors receive an effective individual tax-free threshold of $31,888 per year each, meaning a senior couple can bring in a combined household income of $63,776 completely tax-free. The catch is that the ATO will never automatically apply the full scope of SAPTO unless you explicitly claim it on your tax return items, or ensure your tax agent applies the senior category codes. If you earn income under these thresholds, you are legally in a tax safe haven. Do not let anyone tell you otherwise. Staying with the Australian Taxation Office, let's talk about a source of completely free cash that hundreds of thousands of retirees leave sitting in the government's consolidated revenue pool every single year. This is the refundable franking credits loophole. Many Australian seniors hold a modest portfolio of shares in classic Australian companies like Commonwealth Bank, Telstra, BHP, or Wesfarmers outside of their superannuation fund. When these companies pay you a dividend, they have already paid a flat 30% corporate tax rate on those profits before the cash touches your account. That tax component is attached to your dividend as a franking credit. Now, if your total taxable income is below the $18,200 threshold, or completely wiped out by the $35,813 SAPTO tax shield we just discussed, you owe the government zero tax. Because your personal tax rate is effectively zero, that 30% tax the company paid on your behalf is now classified as an overpayment. The secret is that the ATO is legally required to refund that 30% corporate tax directly to your bank account in cash. The tragic part is that because many seniors earn low incomes, they assume they don't even need to lodge a tax return. They think they don't owe any tax, so they don't need to communicate with the ATO. If you do nothing, the ATO simply keeps your money. You do not need to file a massive, complicated tax return to claim this money. The ATO has a highly specific, simplified document titled the Application for a Refund of Franking Credits 2026 form. You can lodge this via your digital MyGov portal or order a simple paper form. By filling out this single-page document, the ATO will process your dividend statements and send a direct bank transfer for hundreds, sometimes thousands, of dollars of refundable cash back to you. Let's move on to your ongoing household bills. Electricity, gas, and water rates are skyrocketing across every single state in Australia. If you hold a federal pensioner concession card or a Commonwealth Seniors Health Card, you are legally entitled to substantial annual utility rebates. In New South Wales, for example, the low-income household rebate strips $285 per year off your electricity bill. In Victoria, the annual electricity concession gives you a massive 17.5% discount on your total usage costs. Furthermore, for self-funded retirees who hold the Commonwealth Seniors Health Card, state programs like the New South Wales Seniors Energy Rebate provide an extra $250 cash payout each financial year. But here is what the private energy monopolies will never tell you when you sign up for a plan. Their billing systems are designed to keep these discounts switched off by default. An energy provider will never automatically check with Centrelink to see if you have a concession card. Even if you told them your card details 5 years ago, if your contract updates or you move to a new retail plan, that concession data routinely falls off the billing file. To secure this discount, the name on your electricity bill must match the exact spelling of the name printed on your Centrelink concession card down to the last letter. If your bill says Jim Walker, but your Centrelink card reads James Walker, the automated verification system will fail silently, and your discount will be denied without notifying you. You must take control. Call your electricity, gas, and water providers directly. Force the representative to open your customer profile, verify your current Centrelink customer reference number, and confirm explicitly that the active concession tag is locked onto your billing file. Owning and maintaining a vehicle in Australia is becoming an absolute luxury. Between fuel excise, insurance premiums, and state government transport levies, keeping a car on the road is a massive financial drain on a fixed retirement budget. This is why state roads and maritime authorities keep their premier senior concession incredibly quiet. If you are the primary owner of a vehicle and you hold a federal pensioner concession card issued by Centrelink, you are completely exempt from paying standard vehicle registration fees across multiple states. Let's look at the breakdown of what this looks like across the country. In New South Wales, through Transport for NSW, holding a pensioner concession card grants you 100% free registration, free regular driver's license renewals, and conditional free pink slip checks. Down in Victoria with Vic Roads, you receive 50% off registration, which applies to one standard passenger vehicle per eligible cardholder. In Queensland, the Department of Transport offers significant category reductions, giving you flat fee reductions on the structural registration component of the bill. The financial impact here is huge. In New South Wales alone, saving the registration fee and the cost of a driver's license renewal puts roughly $300 to $450 a year straight back into your pocket. The trap to watch out for is vehicle ownership registration. If a husband holds the pensioner concession card, but the family car is legally registered in the wife's name who does not hold a card, the state transport computer will automatically charge the full commercial rate. Ensure your vehicles are legally titled in the name of the specific family member who holds the qualifying Centrelink concession. Healthcare and prescription medication are non-negotiable expenses as we age. The pharmaceutical benefits scheme is designed to keep medication affordable, but if you are managing chronic health conditions, paying the standard co-payment for multiple medications every single month can quickly break a pensioner's budget. As a concession card holder, your standard maximum cost for any PBS-approved medication is locked at a lower rate per prescription. But the real magic happens when you hit the PBS safety net cap, and this is a threshold that pharmacies are not legally mandated to track across competing corporate chains. For concession holders, the calendar year safety net cap is tightly managed. Once your total household out-of-pocket spend on prescription medication reaches the legislated cap within a single calendar year, your pharmacy fees drop to an absolute flat $0 for the remainder of that year. Every single one of your vital scripts becomes completely, 100% free of charge. The hidden trap here is the pharmacy hopper mistake. If you buy your medicine at a chemist warehouse one week, a Priceline the next week, and a local independent pharmacy the week after that, their internal computer networks do not automatically share your safety net balance. You could blast past the safety net threshold, but because the systems are disconnected, you will keep getting charged the co-payment at the register. To prevent this, ask your primary pharmacist for a physical PBS safety net prescription record form. Every time you buy medicine at any pharmacy across Australia, force the cashier to manually stamp and log the transaction on that card. The moment the total hits the limit, your primary pharmacist can instantly issue your official safety net concession card, turning your medicine cost to $0 for the rest of the year. We live in a world where everything has moved online. Centrelink wants you on MyGov. Banks are shutting down physical branches, and stores expect you to use QR codes and digital portals to get deals. For many older Australians, this digital push feels incredibly isolating and frustrating. Major tech support companies and retail chains will happily charge you upwards of $100 an hour to send a technician to your house to teach you how to use a tablet, set up an online account, or secure your home internet connection against scammers. What the commercial market hides from you is that the Australian federal government funds a massive free national network specifically designed to bridge this gap. It is called the Be Connected program. This program provides older Australians with completely free, face-to-face, personalised digital support. The government funds local community centres, libraries, and senior clubs to deliver one-on-one coaching sessions. They will walk you through how to navigate the MyGov system and link the ATO or Centrelink securely, how to safely perform online banking without falling prey to modern text and email scams, and how to operate smartphones, tablets, and download the digital gift card portals we discussed earlier. Do not pay commercial tech companies to help you manage your digital life. Look up the official government Be Connected portal or call their support lines to find a fully funded, completely free digital training partner right in your local neighbourhood. If you own your own home, you know that local council property rates are an unavoidable, constantly increasing hit to your retirement cash flow. Councils quietly calculate their annual budgets based on rising property valuations, leaving retirees asset-rich but cash-poor. Almost every single local municipal council across Australia has a legally mandated concession framework built into their local government bylaws. If you hold a pensioner concession card, you are automatically eligible for a sweeping reduction on your property and infrastructure rates. In states like New South Wales and Victoria, this concession provides a flat $250 reduction off your annual ordinary council rates. On top of that, you are often entitled to an additional $125 reduction off domestic waste management fees and another $125 off water sewer rates if those utilities are managed by your local council framework. Combined, this represents up to $500 in direct property cost reductions every single year. Why is this considered hidden? Because when you buy a house or successfully transition onto the age pension, Centrelink does not notify your local council of your new status. The council will continue to mail you the full rate commercial invoice year after year. You must physically download a council rates pensioner concession application form from your specific local council's website, attach a copy of your current Centrelink card, and return it to their administrative office. Once processed, that $250 to $500 discount is permanently hard-coded into your annual rates notice. Retirement shouldn't just be about surviving and paying bills. It should be about enjoying your hard-earned time. But taking public transport, traveling between regional centres, or going out for a meal or a movie has become incredibly expensive. Commercial entertainment venues and public transport grids have massive senior concessions built into their ticketing systems, but they intentionally bury them behind fine print on their digital ticketing apps. Let's look at the absolute gold standard of senior travel, the Gold Senior/Pensioner Opal Card system in New South Wales. If you hold an eligible senior or concession card, your public transport travel across the entire Sydney-Newcastle and Wollongong Rail, bus and ferry network is capped at a maximum of $2.50 per day. You can travel hundreds of kilometres across the state transport network, and the system will never charge your card more than $2.50 in a single day. Similar deep discount travel systems exist nationally, such as Victoria's free weekend travel allowances for seniors cardholders. In the commercial entertainment sector, major cinema chains like Event Cinemas and Hoyts have hidden senior clubs such as the Cinebuzz for Seniors program. Joining these loyalty programs is completely free with your card, instantly unlocking fixed $11 to $12 movie tickets, free standard popcorn upgrades, and exclusive morning tea screenings. Never buy a standard retail movie or event ticket without forcing the venue to apply the senior tier. As we age, maintaining our hearing health is absolutely vital to staying connected with our families and communities. However, the commercial hearing industry operates on high profit margins. If you walk into a private audiology clinic on the high street, they will often recommend high-tech hearing aids that cost anywhere from $3,000 to $8,000 out of pocket. What these high street clinics routinely hide from you is the federal government's Hearing Services Program. If you hold a federal pensioner concession card, you are legally entitled to a completely vouchers-funded pathway that wipes out these commercial costs entirely. Under the program framework, eligible older Australians receive completely free comprehensive hearing assessments conducted by certified audiologists, access to a wide range of fully subsidised high-quality hearing aids that cost you $0 out of pocket, and fully funded ongoing professional support, adjustments, and a cheap annual maintenance booklet that covers all your replacement batteries and spare parts. Do not let private medical clinics pressure you into drawing down on your precious superannuation or retirement savings for standard hearing care. Check your eligibility through the official government Hearing Services portal, secure your voucher, and demand a fully subsidised treatment pathway. Before you rush off to claim these incredible benefits, I need to issue a massive warning that is currently tripping up thousands of self-funded retirees across Australia. This is what I call the super account-based pension deeming trap, and falling into it can cause Centrelink to cancel your concession card instantly. As we move through the massive March 2026 indexation updates, the federal government did something fantastic. They increased the annual income limits for the Commonwealth Seniors Health Card to an all-time high. Singles can now earn up to $101,105 per year, and couples combined can earn up to $161,768 per year. Each AUSPensiongUIDE. Because these limits are so generous, self-funded retirees look at their situation and think it is fantastic because their account-based super pensions are completely tax-free under ATO rules, meaning their taxable income is technically zero and they easily qualify for the card. But here is the catch. Centrelink does not use the ATO's definition of income when testing you for the Commonwealth Seniors Health Card. If you have an account-based super pension that was started or modified after January 2015, Centrelink completely ignores your actual tax statements. Instead, they take the entire raw asset balance of your super pension and subject it to mandatory deeming rates. As of the current 2026 guidelines, Centrelink mathematically assumes your financial assets are earning a fixed rate of income, regardless of what the volatile stock market is actually doing. The first $64,200 for singles, or $106,200 for couples combined, is deemed to earn 1.25%. Every single dollar inside your super pension above those thresholds is deemed to earn a flat 3.25%. Let's look at the financial danger here. If you have a large super balance, say $2.5 million sitting in a pension account, Centrelink's automated system will run that 3.25% calculation over your balance. That calculation can easily generate a deemed income figure that blasts right through the $161,768 couple threshold. If you fail to declare your super account balances correctly, or if your balances fluctuate and push your deemed income over the line, Centrelink will instantly cancel your card. Overnight, you lose your bulk billing privileges, your cheap pharmacy pricing, and all the connected state-based utility rebates we just mapped out. Always monitor your total financial asset balances. Ensure you run your own deeming math before applying to ensure you stay safely under the federal income caps. To make this completely actionable for you today, here is the quick reference checklist of the specific actions you need to take control of your savings. Every single one of these points is fully verified against the latest 2026 Services Australia, ATO, and state regulatory guidelines. For the supermarket 5% hack, do not ask cashiers for a discount. Log into your state's online seniors card portal, buy pre-discounted e-gift cards at 5% off, and scan those barcodes at the register. For the ATO tax shield, understand that single seniors pay $0 income tax or Medicare levy up to $35,813 in total annual earnings. Partnered seniors pay $0 up to $31,888 each. Ensure your tax agent applies the SAPTO and LITO codes. For franking credit cash back, if you earn under the tax thresholds, do not skip communicating with the ATO. Bypass a full tax return and file the simplified single-page application for a refund of franking credits 2026 form via MyGov to get your dividend tax back in cash. For utility rate protection, call your electricity, gas, and water operators directly. Ensure the spelling of your name matches your concession card perfectly, and manually register your Centrelink customer reference number to activate your annual rebates. For council property discounts, download the specialised Council Rates Pensioner Concession application form from your local municipality's website to hardcode your $250 to $500 annual property rate discount. Finally, for the PBS Medicine Safety Net, do not hop between pharmacies blindly. Use a physical PBS Safety Net prescription record card to track your spending. Once you hit the calendar threshold, your medicine becomes completely free of charge. Team, the system is complex, and the big institutions count on you being too tired or too confused to claim what is rightfully yours. Don't let them win. Take this blueprint, file the forms, change your payment habits at the checkout, and reclaim your hard-earned financial rights. I'm James Walker. Look after your pocket, look after your family, and I'll see you in the next update.